Well, look, we're very pleased with the performance across our four businesses. Obviously, the standout performance this quarter has been in the investment bank and in asset management, both up 11% year on year. But also in the corporate bank and private bank, their performance is doing what we expected this year, which is dealing with the sort of back end of the cycle of interest rates and offsetting the interest rate pressure now with growth in fee and commission income. So we think across those four businesses, we're encouraged with performance, client engagement, and also the momentum that we have.
Let's stick with the momentum, because obviously when it comes to the third quarter, you saw very strong numbers when it came to the fixed income revenues, which makes up a huge part of your profits as well. Obviously, you pulled back from equities trading. That's where some of the U.S. peers did very well. But talk to us about the momentum that you were able to carry over into the current quarter.
Well, look, for us, it's great to be able to focus on the FICC complex. The momentum was there across really the entire product set. So we think we've gained market share. Obviously, the numbers are a little bit trailing, but our credit complex was very strong as we've made investments around the world in flow credit. Emerging markets was strong around all regions. In the macro area, FX did well, and rates was down year on year, but in an environment that was relatively mixed. Again, I think across all four of those product areas, we've been gaining market share based on the consistent investment and focused leadership that we've had in our FICC complex.
What could upset the apple cart here? I mean, what are you seeing from clients in terms of trading, in terms of caution here going into the U.S. elections, or are you still upbeat when it comes to the end of the year?
Well, we think conditions from the third quarter have carried into the fourth. And there's always a degree of volatility around events like an election that's coming up in a couple of weeks, and of course a reaction to what expectations are for policy change after the election. So that to us is reasonably encouraging. There always are things that can change the direction of the market around geopolitics and surprises that are out there. But so far the markets have been able to handle all of the changes over the last several years, the uncertainties, very well. Reflecting, I think, underlying strengths in the economy and investment opportunities around the world, and of course the interest rate cycle that we've now been through and moderating inflation.
James, when we talk your results, we always unfortunately got to talk litigation. Obviously, that's been a big headache for you over the last 10 years, that Postbank acquisition and the legal case related to that. This quarter, though, you were able to release some 440 million euros in Postbank-related provisions due to the settlement that you were able to achieve with some 60% of the claimants back in August. You're still obviously waiting for the remaining 40%, and there's an important court case happening in the German town of Cologne today. What should we expect from that, and when do you expect to settle with the remaining 40%?
Well, look, first of all, your point about litigation, we're looking to turn the page really this year on all of the legacy items that we've had over time, because we don't want to be surprising investors with the type of provision that we had to build in the second quarter. To your point, we were pleased to be able to have finalized settlements with about 60% of the claimants by value in the third quarter, and that produced the release of about 440 that you mentioned. And yes, we have a court case today, sort of the court ruling that was advertised orally back in April is now expected today. Very hard to speculate where the court will go with the ruling. Given the complexity of the matters and the history that we've had over really 14 years now with this, we think our arguments are strong. We've, of course, by providing for 100% of the potential outflows, there's no further risk to our shareholders. But we'd certainly like to see some favorable comments from the court that might enable us to continue down the path of settlements, as you suggest.
And James, the other upshot here is the fact that you have more clarity on capital, obviously, and you have actually applied for the resumption of share buybacks. When will that resume, you think? 2025?
In 2025. So the application that we've now submitted are for the buybacks that we intend to execute next year. We think that's prudent. We wanted to show consistent performance. We wanted to build a strong step-off capital level in order to support that buyback and our future capital distributions intentions. At 13.8 of a common equity tier 1 ratio, we think we're there, and it's given us the confidence to move ahead in our dialogue with supervisors with this application, and we look forward to hearing the result in a few months' time.